What's going on, guys? It's Killer. Welcome back to the channel. Now, it has been a while since I have created a Bitcoin market update, and you can probably tell for the reasons yourself why I haven't created an update. You can see that we've been ranging for approximately 2 weeks with pretty much no decisive price action. So I didn't want to create an update given the fact that we were in a range and we weren't really doing much. But now that we are seeing PA and structure develop here, we can start seeing that our thesis is coming to life, and I'm going to be covering what I'm expecting today, the reason why I am slowly and gradually building into my swing short, and what my overall plans are going into Q1 and Q2. So starting off, I believe in my previous video here, I stated that I wanted to see deviation above the range highs or deviation above the yearly open. We can see that, well, in fact, we are approaching this area here. Do I believe that Bitcoin is done and we are going to retrace directly from here in one candle? Probably not. However, I have begun scaling in just because we are hovering around the yearly open. We did have a slight sweep, but what I'm looking for ideally here is something like this, where we have extended manipulation around this area before a continued move towards the downside. Now, this is my main thesis. It's not driven by emotion, it's driven purely based off market structure alone. We can see here the market's moving in different phases. We can see we had our reaccumulation, expansion, we had distribution, we had a push down, and we can see gradually here that what we saw is a markup, reaccumulation, expansion, distribution. We saw a mark downwards. And what happens during mark downwards or trend shifts towards the downside? Well, redistribution happens before continuing lower. And we can see that, well, we are in the last year here of this cycle, where we are in a bear market for approximately 300 days here. And this is based on every other previous cycle. This is based on stats which have been happening since Bitcoin's creation. So, if the same pattern keeps playing out, human emotion hasn't changed, greed hasn't changed, well, I'm going to keep trading that same pattern until it's invalidated. And it's not just a pattern, we have structural confirmation of this as the trend shifted. So the overall idea here for me is that we see manipulation above the range highs. This was the initial plan, which I spoke about a couple of months ago as well. Matter of fact, a couple of weeks ago, because we have only been in this range for quite some time. We can see since the leg down, we've been in this range for approximately 46 days here. And the reason why I believe we're going to have this redistribution where we have manipulation above the highs into a continuation downwards, well, because if we start looking at where we are, I believe we are in a similar range to here, where we saw a range for approximately 2 months before a leg downwards. Well, matter of fact, 3 months we can see from 90 days, meaning that we could remain in this range for 1 month or a couple more weeks until we see any decisive movement like this, and it could last approximately longer than people anticipate, as ranges can last different depending on the certain phases here. But if we're looking at the characteristics of the previous range here, 90 days, and we can see around where we are now since the leg downwards, we have been in this range for about 47 to 48 days, meaning we could stay here for another 30, 40, 50 days here. So we are approaching our first area of resistance here. If we don't get the manipulation above the highs as of now, we could retest the CME gap, which is at 90k here. Now, we have filled every single CME gap in the past 3 years here. We have filled every single gap since around this price region of 30 to 40k. And given the statistics of that happening, there's no reason not to expect the same thing to happen around here. Do I believe we're going to continue up to new highs without filling this gap? No, we are still in a range. We have still broken down. The broader trend is still bearish. It's risk off. What we are seeing here is a liquidity injection, which is temporary. When momentum begins to gradually shift and slow, all of that new liquidity, which is used to push the price upwards, is going to be resulted in people selling, redistribution, and then a push downwards here. And that is the reason why I am scaling into these shorts. Yes, this entry might be soon. Yes, this entry might be soon. And yes, my 96k entry might be soon. But I do not get married to one particular entry. My idea and thesis is that we see something like this, and then we see that extended move downwards, with 90k being the prime objective target based on them CME gaps, which I was talking about. Now, moving back onto some time-based analysis here, guys, we can see that this was analysis I posted on my X. The start of every single month, we saw July, August, September, October, resulting in a push towards the upside at the start of the month, right? We saw this pattern. We saw November when we had the mark downwards, where we had a push downwards as well. We saw around December, we in fact dumped into the new monthly open and then resulted in a 5 to 10% move upwards. And we can see after this range into the new monthly open, January 2026, we're starting to see that move towards the upside. But if you start looking at what happens after the monthly move towards the upside, well, we see de-risking. We see de-risking, we see de-risking, de-risking. In this case, we already pushed down, start of the month, pushed up, bearish retest the structure here, and we had a push downwards, so de-risking again. We had a push back up, and then we had another push back downwards, de-risking here. So what's the pattern we can see here? Well, we can see that market's pushing up, start of the month, and then it's de-risking towards the end of the month, and we're pushing up the start of the month. So it's just a matter of where this extended towards, right? And if we're going to see that de-risking, we're going to see that de-risking similar to what we have seen since July, right? It's a pattern which keeps playing out. So we're going to keep developing and positioning for this pattern if it continues to happen, right? I'm not going to think, oh, it's not going to happen this time is different. I trade based on math, probabilities, and things which continue to happen on an occurring basis. I don't trade based on emotion. I don't trade based on being skeptical. I trade based on purely the stats alone. And the stats show that at the start of the month we push upwards. This was all expected, by the way. Initially, I was in longs around this region, but they got stopped break even, unfortunately, on this continued chop around here. But the broader thesis was correct. We expected this movement at the start of the month. Now that we are seeing it, doesn't mean we start getting extremely bullish, right? It means, okay, the plan's developing here. We can see that the thesis was correct. And now that we can see that thesis was correct, it's just a matter of how high we go before pushing downwards here. Now, we also have FOMC and CPI approaching. We have CPI on the 13th, and we have FOMC around the 28th to 29th of January as well. Now, I'm not going to show it again just like I did in the previous video, but after every single CPI since around June as well, we have seen a 5% drop on average every single time after CPI. Same thing with FOMC. We have seen pushes towards the downside after FOMC as well. And this is usually where we start developing this bullish narrative into FOMC, and then we have that reversal back downwards yet again. So what we are seeing here, we are seeing pre-narrative positioning by whales using the thin order books and lack of liquidity, but lack of selling pressure to push the price upwards. We're seeing a nice gradual swap bid towards the upside, and we are approaching significant data. As I've said, I do not care about the outcome of data. I care about the narrative and the underlining bullish narrative or bearish narrative into that event. We can clearly see, well, we're developing this bullish narrative, right? And we're approximately 1 to 2 weeks away from these pivots around this area here, right? So considering we are forming this bullish narrative into CPI and FOMC, we can possibly see de-risking of this bullish narrative around them dates as well. So again, like I said, not going to get too hopium, not going to get too bullish, because at the end of the day, we are still in a bearish trend, and all we are seeing is a push upwards into this data, which could mark a trend shift. Now, my overall idea for this trend shift was that around February is where we start forming that lower high. So we could extend up here for quite some time or a couple of weeks before having that reversal back downwards. And again, if we start looking at the previous update here, when we had the sweep of these highs here, we can see we had our range highs, which we kept rejecting. We had our deviation. We have our range highs here. And if we compare the same type of pattern here, we are approximately around here based on this previous pattern here, meaning if we see a similar pattern to here, we see this occurring and a push downwards, right? A lot of people can use Fibonacci levels. So if I mark the swing high for the swing low, we can see we tested around the 0.38 region. If we do the same thing around here, again, we could test around the 0.38, which is around 98k maximum, which is what I brought up as the maximum area here. So I'm shorting here, 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 and here. My invalidation is approximately at 104k, which is around here, and I am targeting this push downwards based on what happened in the past and the broader market trend. So this is my overall idea and my overall thesis here. And I just want to quickly go over some more higher time frame analysis before we wrap up today's video here. So starting off, if we start marking the previous bull market highs, well, the recent ones, right, where we mark just the highs alone, we're going to start to see a pattern which I brought up on my X as well. We're going to measure 140 days away from this area here. So we start marking 140 days. We start marking 140 days. We start marking, well, 140 days here. We can see that approximately midway through the 140-day period, so we're going to quickly mark midway through, and then we're going to mark towards the end. So we have a 70-day cutoff between 140 days. If we do the same thing again here, directly in the middle of 140 days, and we do the same thing here with directly 140 days in the middle, we can see that we are in fact formed the bottom around this region, and looking at the past, we formed a pivot swing high before that bear market, pivot swing high before that bear market, and that is why I'm expecting as well around that February where we do form that significant swing high before going into a bear market here. Like I said, we're still in a range. This is my main idea, the 140 to 70-day pivot in the middle. We can see pivot low, pivot high, pivot high. So this is what I'm expecting on the higher time frame. This is my more high conviction thesis here. You could not short, you could just wait for this February area and then you could trigger. But again, like I said, I like to trigger when my POIs are being tested. If that means I'm early, so be it. But if my analysis is correct, we'll see that reversal to the downside, and the risk reward is still in my favor, even if I enter early. For instance, if I enter here, my stop loss is at 104k, and my main targets are below the previous all-time high here. If we just start marking around here, where we see previous all-time high, we can see this is a 2-hour setup alone, and this is only counting one entry. I have multiple scales, and if all of them are filled, my entry is going to end up doing this, increasing the risk to reward ratio of this trade here, right? So even though I might be entering slightly earlier, the risk reward is still in my favor here. If we get above 104k, I've been completely invalidated. We've went higher than previous bearish retests in the past, and I will own and admit my mistakes here. But as of now, broader trend is bearish. This is what I'm expecting. Also, Killer Labs is going to be released within 1 to 2 weeks from now, so make sure you follow my X if you haven't already, because I am going to be posting how to sign up to this if you want to get access to my education, my pivot indicators, and overall how I trade and how I've developed this type of mindset from time-based analysis to predict where the price is going to move before it actually moves there. So if you guys are interested in that, make sure to go to the website down below and just wait for me to post on X the details, and you can all sign up. 48-hour window sign up period. It only happens every 3 months, so this is not something which happens on a regular basis, right? Except a few people in. We have a little group, and obviously you can ask and discuss questions, trading related, educational related, and so forth. But anyways, thank you for listening, and I'll catch you guys later.